Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. That's weird. Why did it do that? Man, I had, when I started out, I had the music on like way too loud and was playing the wrong playlist. But then I don't know why the microphone wasn't connected up correctly. I guess OBS didn't save the settings correctly last time. Guys, Friday was kind of a little crazy. I'm starting to see some signs here today that things are going to be a little busy again this week. But we're going into like one of the slowest weeks of the year for the summer. So it's kind of weird. I think that you might see some activity, but the market makers are likely to still try and like clamp down on the volatility, kind of like they tried to do on Friday and failed. So what do I mean by that? Well, let's come over here to the charts. So you can see here on ZN, big downturn. And then by the time we had ended, they were all the way up here and they had completely retraced that. I was very, very frustrated. Okay. Now, normally for Friday, that would be the end of it. But they kept going and pretty much sold the entire rest of the session. And now here today, a little bit of selling overnight that they were able to like recover, and they were, and now here on the open, another strong wave of selling, taking us out to new lows. Now, we haven't taken out like the low from August 4th, which is at 109.24. S&P 500, a little bit more sideways. We're getting quite a swing in the overnight action here. So again, this is like there's stuff going on here, quite a bit going on for a Monday, right? Right out of the gate on Monday, that kind of tends to predict some strong activity for that week. Here's oil. Oil also kind of doing some crazy things overnight, but slightly lower than it was last Thursday. Gold and silver are getting creamed as the interest rates just continue to push, and Kappa continues to struggle as well, as things in China don't seem to be going very well. So over here, well, Bitcoin languishing in the overnight session, somebody trying to buy the dip, and the dollar continues to be strong, going up to 103. So, I'm kind of seeing what looks like a stagflationary macroeconomic environment again. So, I think there will most likely be activity on Tuesday and Wednesday. Well, let's come and look at the schedule now. It is a Monday, so that's one of the first things that we should probably be doing is this week, making sure that we got all of the key stuff here. Okay, so tomorrow we do have core retail sales. That is a pretty big number. Wednesday, FOMC meeting minutes. And then Thursday, unemployment claims and Philly Fed. So this week it's okay. Next week is when it's like, yeah. Well, you did get flash manufacturing PMI the week after that. And Jackson Hole. Wow, this is like late summer, right? So markets are often a little quiet. Like this is the week where we have people come into Discord and are like, what's going on? Why is the market doing this? Well, it's summer, dude. Go on vacation. Rich people go on vacation at this time. But I think you're right, TLA Trader. There are a few things that there is some data that we got to look forward to this week. And the market is moving quite a bit in the overnight session for a Monday. So that suggests that we're going to have some fun here this week. Now, as for me, what I should do, I did, by the way, if I didn't make it clear, on Friday, that trade had come all the way back on me. I was super frustrated, shut the stream down because it was time to end the stream, said, oh, I guess we'll scratch it, but I did not actually take it off. And I held it and made it all back. So, yeah, that was kind of that whole thing. It's getting really suspicious to me that it feels like it fights me. And then like, as soon as I walk away from the stream, then it starts going my way. And like, I tend to be right on the direction. But something that you're going to see happen with the large meta orders is that they need the contracts, right? And if you're already short, that's a contract that they could potentially get that they need, right? So they're going to do everything they can to try and like scare you out of it because they need that liquidity. So I think that's kind of what was happening that day, was that people, too many people went short and they kind of had to mess around with it, Would argue about being right about direction but wrong about timing affects all of us to extreme degrees. That could be true. Like in analyzing my trading over the past few weeks, because I have been on a pretty bad drawdown, and what it comes down to is the losers are just too big. Like if I'm right in the kind of trade that I would typically want to be taking, it should just be going right away. Like it shouldn't have very much adverse excursion, and that has not been what's happening. These ones are like, I will get the adverse excursion almost right away and then like hold out forever and ever and ever on it coming back, and I'm never able to get it to quite go my way, until I puke. So I don't think I think that overall those were all like, I might have had the direction right on the day, but it wasn't anywhere close to what things were going to be during my time frame, and so they were bad trades. Anyways, luckily, it's just a drawdown of some of the money, that we had made in the last month, so we're okay. I haven't go back and forth with whether or not to kill a trade immediately if it doesn't cost. Yeah, well, like, like the one on Thursday, I think it was. I held it for like the entire session and it never went, right? And in the meantime, I had excursions against me like 10, 20 ticks. Okay, so I don't know. The treasuries were like pushing down pretty aggressively here at the beginning, but I'd say that it slowed down considerably. So we'll see if they back up or reverse. I'm kind of getting an inkling that they might reverse here. So another thing that we got to keep in mind is that it is the summer, right? So is risk and profit plan subjective? Well, since I don't think that there is any kind of strict definition of what that means, I would certainly have to say it's subjective, right? One of the things I've kind of seen is that a significant portion of your edge comes from the exit, not the entry. We put all of the focus on the entry, and a lot of it has to do with the exit. Because if your exits are just like straight targets, you know, like I take 10 ticks risk and 20 ticks target, and that's all there is to your exit, then your results are going to be pretty random. My back testing kind of suggests that when you do that sort of a thing, that the results that you get out are pretty close to random. But once you start finding an edge, like, you know, these kinds of liquidity holes is a great edge in terms of taking profits, right? That's when you're able to start making like really skewed risk reward. You know, that's where you can have like relatively even win rate, but still have winners that are way larger than your losers. Yeah, it's not how much money you make, it's how much money you keep. That's not to say that there shouldn't be an edge in your entry, right? But, you know, like especially with these meta orders, right? If I have reason to believe that there's somebody out there with a large sell meta order that's not related to news or anything like that, it's just like, you know, I know based on the balance of flows and stuff that they're going to need to sell today, right? I don't necessarily know when they're going to start. You know, I can kind of guess based on how I would try and execute the trade. For instance, if there's major news that day, I might wait for that major news, because if I think that major news has a really good chance of popping and they want to sell, then that pop is a great place for them to start selling it at, right? Those sorts of things. But like in terms of you being able to pick when it's going to start, you know, down to the minute, it's kind of hard. So you have to have a certain amount of leeway. You need to have at least like 15-30 minutes of leeway sometimes. But I've been giving it more than that in some of these instances, which I think was where my mistake was. Have you already? No, I haven't taken any trades today yet. We're just going to kind of wait. So I think that today I am a little bit leaning towards the short side, but I'm a little bit concerned that they have maybe already gone too far on the short side. I don't know what the selling was going into our session. So, and then once we actually started the regular session, the treasuries are kind of giving me this rangy, quiet Monday kind of behavior, which is a signal to me to not take any trades. So we may come out of today with just having not taken any trades. Even though I'm kind of suspicious, I kind of think that this meta order that we had on Thursday and Friday may still be out there. It's kind of what I'm thinking. The dollar is moving, my oh my. Okay, it's like what, 7 cents in the last minute, but still the dollar is moving. It's curious that the treasury is not reacting as strongly, because normally that would kick them down to the lows potentially. Well, I guess the dollar and the treasuries have kind of been positively correlated lately, which is, I don't know. the correlation between the dollar and the treasuries is often complicated and shifts and but the dollar has been largely stronger, and that's been resulting in higher yields. Or maybe it's the other way around. I don't know. But that time, the dollar moved and the treasuries really didn't. So oh hey, Joseph Wing started making YouTube videos. That's cool. Hey, how many videos does he got? Oh, he's been doing them for the last 3 or 4 weeks, in fact. That's cool. I love that. Joseph Wang, he's a former trader for the New York Fed, so he has a lot of useful insight for us. All right, so time to step over to the platform formerly known as Twitter to see if there's any interesting stuff going on overnight. Well, Nick Timmeros, University of Michigan survey says consumer expectations of year-ahead and 5-year-ahead inflation were little changed in August from July. Long-run expectations have been around 3% this year, while short-run expectations have declined to their lowest levels in 2.5 years. Okay, so this is an interesting thing. I think, who was it? Bill Gross, the former owner of PIMCO, he or what? Not owner, manager of PIMCO, right? He was saying that he's short rates, and I think that the general thesis behind his trade was that he thinks that inflation overall is going to settle at 3% rather than the target 2%. Which means that you're going to have to keep interest rates high for a really long time, and that's going to kill the longer end of the curve, right? Because right now, the long end of the curve has not really been pricing that interest rates actually stay higher for longer. They're kind of pricing that sometime within the next year that the Federal Reserve starts bringing interest rates back, and then we kind of go back into this low interest rates forever kind of regime because of like population decline and things like that. But Bill Gross is saying that no, in the short term, inflation is going to remain very sticky for maybe 5 to 10 years. And that means that long end of the curve has to come down. Well, the rates need to come up and the treasuries are going to sell. You have been seeing some of that where there have been some of these moves where the curve steepens. Because last little bit of a turn, there was slight amount of steepening, but it's not really enough to really make a huge difference yet. So, might not be anything. It depends on whether we have to talk about the banking sector again in 2 to 4 weeks. Yeah, so it's interesting you bring that one up, TLA Trader, because I've definitely started to see people over the last week start to bring that up again. But I guess it's probably because rates are higher again, so like every time that the market brings the rates up, then you have to start worrying about those regional banks again, don't you? But I think that at least the regional bank deal, that with the facilities that they created after the Silicon Valley bank failure, they should be okay. I think that if we were going to have something happen, it would need to come from something different, right? There's plenty of other systems in the financial system that could go awry. I don't know what it would be, right? But I'm a little hesitant to jump on board some of the, we're going to get Silicon Valley part 2. Well, the treasuries did come back down towards the lows. So eventually they did give heed to the dollar. It was just a very delayed reaction. A little bit of iceberging at the evens. Or no, I feel like that, I feel like So one of the theories that I have, this is like a really far out conspiracy theory that I have, I guess you could say, is that I think that we tend to have key dates in our lives that, you know, we're basing kind of all of our goals and our habits and things around these particular dates. So usually, like in school, it's like when there's a major test. There's like a major test, you know, everything is kind of geared towards studying for that test, and then after that test, things kind of change, right? Well, my theory is that those days actually kind of converge for a lot of people, and so we get major inflection points at certain points, right? Well, one of the biggest ones of the year is when school starts up again, which is at the end of the month, right? So we're coming into an inflection point where we've had this whole thing of like, at the beginning of the year, people said that there was going to be weakness in the first half of the year. Didn't happen. Now people are saying there's going to be weakness in the second half of the year. Well, we were in the summer. You could see how things turned out in the summer. Okay. But now when we get into the fall, let's see what they do, right? Because that, I think, is the place where after this kind of regime change that you get after school, after Labor Day is like the big one, right? After Labor Day, the markets shift considerably. The change could be a more bearish market. I mean, the market has already kind of been turning bearish for the last week, but you know, that could just be a pullback. You know, we could probably justify that as just a pullback, right? There's also, you know, there's this other thing, which is like commercial real estate collapsing. Well, it has been collapsing. Does that result in a financial crisis or something? At some point, I suppose it could, but so far everybody's just ignoring it. Even though there's buildings like going for block, you know, forced liquidations and stuff like that all over the place. So man, so yesterday, my wife came in here to do some work on the computer, and the baby insisted that he be in the room too. And so she let him in, and she let him just absolutely trash the room. Like, he even moved the monitors and stuff. So I'm still finding little things here and there that I have to fix. Have to have a clean workspace. This workspace is not as clean as I really want to get my new larger desk. Because like one of the things is I have enough room for my clipboard that I put all the sticky notes on to keep track of what I'm doing. And I had to rearrange that recently because I was doing so many different things at my new job. But like, you know, the new desk will have almost a foot more room, and that'll make it a little bit easier to keep some things organized on here, I think. I've also been getting into like getting nicer notebooks and taking notes. I think I might. I'm thinking. So first thing is I've got like one notebook already, and I'm gonna turn that into like that's like the rough draft, and then I'll copy things over into this other one. But that notebook is kind of more like thoughts and plans. I think that I want to have a second one that is trading. That to go through and try and track the flows by writing it down and see if that's any different. I've always kind of wanted to make something for you guys that you could like subscribe to and get every morning before the stream. But it was like, well, you know, there's changes overnight and stuff, and I wouldn't be able to put that out before the stream because I'm getting ready, right? But if I do something at the end of the day before we go to sleep, you know, maybe that would be interesting. And that would be kind of more of I think a lot of it would be a synopsis of what happened that day, but I'm going to start writing it down first and then see where that goes. So I find that having to write things down really changes it for how you think about it in your mind. On one hand, it like you are really reiterating it, you know, in your mind as you're writing it. But on the other hand, I find that your brain tends to like discard it more readily because it knows that it saved it somewhere. You know what I mean? Back up here. Actually, new swing high even. Well, I don't know about that. So, you know, this is exactly what happened on Friday, actually. So, if I was to take like your traditional technical analysis, how would I analyze this current market? Well, I think the most clear one is when you follow the zigzags, right? We're getting higher high, higher low, right? So if you're trading Dow theory, you're probably expecting it to come just barely short of the previous one, swing low, and then like bust higher, right? Well, and in fact, you might even say that this might not come back very much at all, and it may just continue going up, right? So I wouldn't be surprised to see it go like right up almost immediately, okay? But let's just consider if there is a sell meta order, right? Well, he would love for everybody to come in here and see this pattern and start buying, right? So I'm always suspicious of these chart patterns, especially when it contradicts what I'm seeing potentially in the day's flows, anticipated flows. That's how they catch it. And they did that. They did that freaking... I mean, that was exactly what happened on Friday. They did this several times. Let's see if I can get back far enough. Okay, so they did this sort of a thing, which was like, oh yeah, okay. It's actually almost completely retraced, so you might expect this spot here to fill in now at that point, right? But they didn't, and it was just like trend down, right? So then you'll see it sort of again. It's like, oh, maybe not right there. Let's see here. Where was the most clear one? Yeah, it was right here. See it right here where you're thinking like, oh, okay, that's the higher high, but then nope, they sold it. It goes dead. Sold it, goes dead. In the end, it did all sorts of crazy things to make you think that it's going to reverse or who knows what it's going to do. But that sell meta order was there the entire time and never actually let up. And so I read almost all of this as, oh yay, more opportunities for me to sell. Right? The only thing that saves you there is knowing what the flows are. Right? Let's see here. I keep getting myself distracted and don't completely finish scrolling back here on Twitter. People's Bank of China attempted to fix the yuan stronger. Indonesian central bank confirms forex intervention to sell dollars. Traders reporting Indian central bank RBI sold the dollars. Bill Lowry says it's all happening. Okay, so some signs that wild things are happening in the forex. Well, the dollar is getting stronger right now, right? What's this from Elon Musk? Ugh, I don't know what he's talking about. I think that's a game. Did you see all this stuff about Elon Musk and Mr. Zuckerberg were texting each other? And Musk was like, why don't I just come to your dojo and we can have like, you know, a preliminary exhibition match sort of a thing. And then Zuckerberg was like, no, like we've had, you know, Dana suggested a day, let's just do that. And so now Elon is saying that like Zuckerberg chickened out, which is like, no. But Musk was the one that posted those text messages. And I'm like, why would Musk put out those text messages? Because it really sounds to me like Musk is trying to get out of it. Like I feel like that this guy is just trying to give us blue balls now, right? Like just set up the UFC match in Vegas so that we, you know, and set the date so that we can start betting on it and stuff. Because okay. Good morning, Seth. Good morning, the fish Jerry. That's an interesting name. This is a new one though. Welcome to the stream. Where do you usually read your news, and what is your opinion on what kind of news that will potentially have an impact on the market? Okay, so the first thing that we got to remember is that what we're really trying to do is predict orders. So with any piece of news that I'm reading or any kind of analysis that I'm reading, I'm always asking, does this analysis lead to somebody placing a trade, placing orders on the market? Are there players that are forced to do something in the market because of this news? That's where you get the really big movers, right? That's what I'm always looking at, okay? Now, the best place that I have found, and I admittedly, this source is very, very flawed, okay? But the best place that I have found to get this kind of information is Zero Hedge. So Zero Hedge seems to be like the only place I've seen in the financial news establishment that understands that it's orders that actually move the markets and not necessarily fundamentals. And so they're always pointing out these situations where the fundamentals suggest that one thing should happen, but then you look at the overall, flow of orders that are set to come through because of like various fund strategies and stuff like that. It's the opposite, and it contradicts the fundamentals and these what they will call technicals, but I wouldn't really use the word technical, but you know, they notice that trumps fundamentals very, very frequently, right? And but then what's really most useful that you get from Zero Hedge is that they will summarize what major Wall Street analysts are saying. Especially, they like to talk about what the flow trader analysts are saying, like the guys from Goldman Sachs, that they look at their own order flows and say, okay, like, where is the money actually going to and from? What are these different funds doing, right? That's very valuable information. So that's the first thing that I've done that I would go through, right? Then when you're actually trading, you know, I would have a news squawk open, right? And you know, we haven't had like a really strong market moving headline in a long time. Seems like we went through for a time a market where like headlines were moving us like practically every day, and we've been through like almost the whole summer, I think, without like a super major headline. It's also died down a lot since Joe Biden became president, right? When it was Trump, they were doing those crazy sorts of things all the time. So you know, have a good news squawk. I read the newssquawk.com. They have a morning synopsis that you can read for free. I always read that when I wake up. I read Zero Hedge a lot, but then I go to all of the other websites, you know, like I will visit CNBC. One of the things that I'm often trying to get a feel on is just like what the overall market sentiment is, right? So it seems to me that market sentiment as of late has dramatically improved, but sentiment on the street has not. Right, the working class people are still struggling hardcore. I mean, it's really rough for working class people out there because they haven't gotten wage increases, you know, and they don't necessarily have the opportunity to just go and switch jobs and get more like middle upper class people do, right? But sentiment on Wall Street has markedly improved, and you can definitely see that in the headlines that you see on CNBC, the stuff that you see on Reddit, the stuff that you see on Twitter, just anywhere that I can get potential information that tells me something about future orders that might be submitted or what the overall market sentiment is. I'm interested in reading, and it's just kind of a matter of absorbing as much information as you can, understanding how the market actually works, and then let your brain and the neural networks in your mind do their magic. And, sometimes you will just know what's going to happen and you can't even logically explain it. And it's because your mind is doing the machine learning magic behind the scenes, right? So that's how I approach it. Billionaires blue ball us on a whole other level. Well, I mean, I think people are going to be awfully upset if this fight doesn't actually happen, since they've hyped it so much, right? And they've both been like, there was a comment in there from Zuckerberg in that text message that kind of makes me think that they agreed to hype it. And then Zuckerberg is like, oh, I'm hyping it, and now you're saying that maybe it's not even going to happen? Well, Musk probably sees it primarily as advertising for the platform formerly known as Twitter, right? So, last week in Utah, there was Joe Biden came to the state, and there was a crazy old man that was making threats on Twitter or something, saying that he was going to go and, do something rash while the president was in town. And so the FBI went and visited his house and ended up killing him. And people on the right are very upset about it. I mean, it was a crotchety old man, like, saying crazy threats online that he couldn't back up. But the whole situation is, in my opinion, a little suspicious. That it ended up escalating to they needed to shoot him. And the right is very, very concerned about this before really getting all of the details. So I find this very curious. I believe this may be a small view into the mentality and thinking of the far right now, which is like a siege mentality, which is not kind of what I thought most people were, where most people were at, I think I'm going to regulate. Well, that can really help because, you can see how I interpret the news and you can see how everybody else is, what sort of things people in chat are picking up on. So that's kind of the thing, is we're kind of working together to sort out what the flows might actually be. Oh, are we getting new lows here now? Well, there you go. Didn't I say? I don't know. I didn't expect it to play out that quickly, so I don't know if I can take a victory on that one. But I did kind of warn, like, they're trying to make it look like, higher high, higher high, higher low, higher high. Oops, new lows. Right? They're trying to make it look like it's reversing so that people will buy, so that they have liquidity to sell into. Yep, and I will, you know what, I've been doing this since 2017, and I anticipate that I will continue doing it until the day that I die. So, would you recommend day trading to blue collar people? Well, so I don't think that it necessarily matters where you are in life, because you can be a blue collar person and have the ability to take on the risk. It kind of matters. So, like, for instance, if you're single, that kind of increases your ability to take on risk, right? You don't have to have a whole lot to live. You don't have to have a nice house or a nice apartment or anything like that. And so you can keep your expenses really, really crazy low and take big gambles, right? Whereas if you're like me and you have 5 children, you can't. That kind of limits the kind of risks that you can take, because if you bet all your money for the month, you just get kicked out of your house, right? That's not going to work. Okay, so it's dependent on a number of factors. Okay, but you have to have that ability to regularly take on risk, which is to say that you're making income from some other source, so that if you screw up, you can quickly refund yourself, right? If it's a situation where it's like it takes you a year to save up for your trading account, and then if you blow it, you're going to have to wait another year, that's probably not going to work. Now, that doesn't mean that you can't continue to practice, because that's the other side of it, is that eventually, as you get older, you probably will come to a spot where you have that ability to take risk. Like maybe the kids leave the house, or, there's lots of things. I find that a lot of guys, when they get into their 40s, 50s, 60s, or they retire, and then they have the ability to day trade, and they do really well with it. So, and I think that people that are blue collar have other kind of advantages too, because they're not as stuck in the Wall Street kind of bubble mentality, and so they can, especially when it comes to like picking stocks, sometimes if you're a blue collar guy but you're really into the stock market, you can find really good opportunities. So what is best? Can you ask fellow minded people about day trading? I have really simple questions. Well, so probably what you want to do is go to our Discord, which there's a link in the video description, or you just ask questions here, right? I think the big advantage that our stream has that you're not going to find anywhere else is that we have a really solid understanding of the market microstructure research that is out there that really, really explains why the market behaves the way that it does, why it's so difficult to trade, why most day traders lose money. And if you kind of get those base fundamental questions answered correctly, that makes your life a lot easier, because then you don't waste your time on some of these other kind of ideas that, like most people, they spend most of their time trying to look for chart patterns. Well, when you understand how competitive the market is, and that, trading on something kind of removes that edge to some extent, only so many people can take advantage of any one particular edge, then that right away is going to tell you, okay, so any kind of technical analysis strategy that is popular is not going to work, and I shouldn't waste my time with those, right? That's like a huge, that right there puts you ahead of like 80% of retail traders, if not 95% of retail traders, because almost all retail traders are trying to find the most popular TA strategy and just trade that, right? Yes, I did. Are you talking about where they just where the newspaper was going to publish some information? Yep, that is that. So this newspaper was going to publish some information about the local politician, and so they had the police come in and shut the newspaper down. That is crazy. Let me tell you something. As a Mormon, okay, you know how Joseph Smith died, right? Okay, so it's because they shut down the newspaper, right? You don't touch the Midwesterners newspaper, man. That is crossing a line. That pisses people off. So that story is really curious. I'm gonna bet that blows up a little bit. Curious, now that we've made a new low by like what, 2 ticks? It's been pretty slow and just kind of chilling here. So it kind of it's kind of feeling to me like there is a large sell meta order, but that it is also slow Monday market, and the market makers are treating it as such, which is probably a little frustrating for the guy that's trying to sell. Totally agree. I find it very odd to think that if there is a strat with 100% win rate, then why don't they keep it to themselves? Then why do hedge funds pay so much for their portfolio manager, right? Or I think that the first thing that I had ever seen that had kind of tipped me off to this was how secretive Renaissance Technologies is about their strategy, or really any of the big quant funds, right? Because I end up having this argument with retail traders on Reddit all the time. They just don't understand. And that's because I think the key piece of information that they're missing is that orders have a strong impact on markets, right? So these guys, they did this study. They said, if you put $1 into stocks, how does it change the overall market cap of the stock market? And you think you put $1 in, then theoretically, from a fundamental perspective, should increase the market cap $1. Put $1 in, you get $1 in market cap, right? But we actually find that it's actually $5 to $8, right? So basically, think about it. Every order that goes out there impacts prices 5 to 8 times more than you would think it does. Than your intuition says. Okay. So if that's the case, that means that it's easier for retail traders to eliminate an edge than they realize. They think that we as retail traders are so irrelevant to the larger picture because these other guys are huge. And that is true. These other guys are huge. We're minuscule and irrelevant compared to them. But the orders have such a strong impact that even a small group of retail traders can impact prices in situations and kind of eliminate their own edge. It doesn't take that much money to do it. If you have a strategy and you're being successful with it and you're sizing up, the point at which the market will react to your sizing up and like you'll tip the market off to that strategy and like screw yourself over comes much sooner than most retail traders think. And so it's not uncommon for retail traders to have a little bit of success and then size up too big. That's another thing that happens. You start having success and you haven't already gone into this stuff. So in our book, I talk about this. Which video do I talk about this in? I'm pretty sure I talked about it in one of these videos, but I don't remember which one. But we talk about the Kyle model. So in 1985, Albert Kyle wrote this paper about insider trading, and you can kind of use that, the formulas in there as kind of a really rough model for impact, right? And like trade sizing. So if you start having success and you're not familiar with the Kyle model, go and read that and use that to size your trades. Okay, that's what will prevent you from ruining your edge. Okay, do you have any resources for E-mini futures trading? I've been trading crypto derivatives for a good year pretty successfully, but this is way tougher. Well, equity indexes are really difficult to trade. So, again, we're trying to predict future orders. Well, when you look at an index, there are situations where you can predict that new orders are going to come into the stock market as a whole, and those can be really amazing trades. But those are not every day. And so if you're going to trade the E-mini, there's like so much more that you have to keep track of. You have to keep track of like what are the flows in like all of the individual stocks and what is the difference between the futures and the index and what are the options doing? And there's so many things to keep track of. And so trading doing what we're doing as an equities index trader is incredibly difficult. It is an advanced instrument. Okay, I recommend E-mini trading for experienced, advanced traders that, like I don't think I see myself ever going back to trading E-mini futures unless I was like really making a ton on the trading overall. Like I was making enough that I could probably quit my day job. I don't think I ever would quit my day job, but maybe I was getting to that point, and then maybe I would be thinking about trading E-minis. It's just really hard, right? And there is a lot of randomness over there, and that's the other thing, is that you do kind of have to be able to just withstand a lot of randomness over in the E-mini. It makes it really good for noise trading, but noise trading in general isn't very effective. So, but I do have a couple of resources. I have a video talking about market gamma. I have a video talking about the closing auction. I have a video about, what else do we got? Oh, I had on the tip of my tongue another one, but I can't remember what it was anymore. It was probably something related to options. Okay. So there is some information on here, but I'm focused primarily on the treasuries because I think that's a better opportunity for this style of trading, right? I really think you should paper trade for at least 6 months before jumping in. Well, it's going to take most people years to become, especially if you've come in and financial markets is something that you've never paid attention to and you're like brand new, then it's going to take years. Because, you know, when we're talking about watching the flows and what kind of news will, you know, predict future orders and that sort of a thing, part of how you learn it is just watching all of the news, keeping track of all of the flows, and seeing how that plays out year after year. And you kind of have to have like a whole year's worth of experience because there's like seasonality to it, right? So it's like when I was coming in at the beginning of the stream today, these next 2 or 3 weeks are some of the quietest weeks of the year. They're not as quiet as the period between Christmas and New Year's, but this is like peak summer action, which tends to be very tight and dominated by market makers, right? Then after that, you get into the September-October time period. That is the time period where the market tends to have its biggest sell-offs, right? After you've been through that a couple of years, then you understand it and why and how the business cycle kind of like evolves over the year to create those kinds of consistent moves. But you know, that's why it takes experience for sure. Okay, so 2 questions here. What can you recommend trading? Keeping in mind my account size is like 1.5. Well, okay, so what I'm doing is I'm trading micro treasury yield futures. And although they've been moving a lot lately where you can get trades that are like $50, most of the time in the micro treasury yield futures, you're risking $10 to make $10, right? And they move relatively slowly and intentionally, so you get enough time to do your analysis, think about what you want to do, get in, wait it out. You have to be patient, but these micro treasury yield futures work really well for a small account. Now, the big downside of the micro treasury yield futures, okay, is that they're tiny. Okay, so if you're paying like $30 to $50 a month in data fees, right? That might be what you make on an average month, right? So you won't necessarily be building an account trading a single lot in micro treasury yield futures. But if you're new, you want to be doing live trading and get the experience of live trading, you can do that and trade perpetually for that account for a very, very long time, right? I've been trading this account since, I think it's been almost 2 years. Oh no, I think I might have switched in 2022. I don't remember. I think it's been 1.5 years. And then I had been trading that other account on the other broker for another 6 months, right? So I've been, you know, I haven't had to like refund the account for a long time because I make enough to pay for like all of the fees and stuff like that, right? So that's, you know, and I always recommend coming in and trading the 10-year, just ZN on Sim for a couple of weeks when you get started, because the stylized behaviors of order flow are really, really clear in ZN in a way that they just aren't in other instruments. Like ES, there's so much noise, sometimes it's kind of hard to sort out. But in ZN, when it's happening, it's so clear. Right? Favorite source of news? Oh, we kind of already covered that one, but I really like Zero Hedge because they will do a synopsis of what the large Wall Street analysts are saying. I think here when school starts up again, I'll probably bite the bullet on the Zero Hedge Pro subscription so that I can read more of that stuff. That's what I'm typically looking for to read. Let's see here. Did I miss anything here? If you ask a question and I don't answer it, you can always just, just ask again. Pretty small stream here, pretty flexible on where we go. So that's kind of the nice thing about this stream. I'm still, I would think that I should be like really wanting to go short because we pushed that new low. I've kind of been right on the flow overall, so I would be like, oh yeah, so that's a short. I should be taking the short, but the market making and so forth continues to be just really quiet. So that flow might be out there, but I'm not convinced that it's worth taking the risk in this situation, because when the market maker is kind of dominant and is clamping down on volatility, that can make it really hard to make money, right? Because I could see it where like I take it short here, and then like maybe the best that I get, it might go against me like 3 or 4 ticks, and in this kind of a situation, that would be pretty bad. That'd be pretty hard to come back and make a winner on the day. So like I would really have to catch a really, really good spot for me to want to take it, I think. Okay, so, I wanted to read this thing. This is about that story in Utah. I'm not going to read it out loud, though, but just let me read this real quick. He's right. The guy appears to be Mormon, and if they had spoken to local law enforcement, they might have gotten church involved, and they might have, told him to chill out. Yeah. Like, this guy probably didn't, I don't know if they, like, just went in and, like, shot the guy. But there's certainly, I could see things where they could have approached things differently and not have had to go that far. Are you saying that MES is also hard to trade? Why does it seem like everyone trades it? With 1.5K, I'm trying to risk 1% per trade, aka $15 and go for 2 to 3 risk. No, I'm not on MES. So the way that I would approach it is, I think that you want to keep your maximum day loss between 1 to 5%. Okay, so if we're talking, the account that you have here, you want to make like $15 to $50 a day, right? Probably don't want to have a day that's worse than $50, worse than 5%, right? Because if you're trading futures, you're probably going to come into a day where if you kept trading, you would have a 20% loss on your account, right? That's too much. You don't want a 20%. 10%, maybe if you're doing like risky things. But if you really want to keep trading for the long run, I would keep it to below 5%, I need to make a video on position sizing. So a video about like how big of an account do you need to have, where we can kind of go into this in a little bit more detail. But there was this prop firm, Forex prop firm, and they went and looked at their stats, and the people that got funded and stayed funded for months, for a really long time, because most people will lose the account within 6 months, but the people that kept it for a really long time, I think that they said that they didn't have a daily loss more than 1%. Okay. But here on the treasuries, if you're trading micro treasury yield futures and it's like $10 a day, you're good. Some days it'll be 50. You'll probably be fine, right? You can trade that for a really, really long time. But on ES, like on MES, like, man, $10 is like not even, it's like 5 ticks. It's just like a sneeze in MES, right? I had one time I got 10 point, so 40 tick. I had a 40 tick slippage trade once where my stop got hit and the price that I got was 40 ticks from where my stop was. Right? That's pretty devastating for a small account. That's like a 10% drawdown just from a slippage, right? So they kind of introduced the MES to make it possible for smaller accounts, but my experience has been that $1,000 is probably too small for MES. That you would probably want to be doing more like 5 to 10K to trade MES. And then even then, like, it's just really hard to trade. Okay, so why does everybody go with MES? So there's two reasons, okay? Number one is that the stock market has been the market that has always gotten the attention. Like in the media and everything, people, right? When people think about day trading, they don't think about interest rate traders. They think about people trading stocks, right? So that's just kind of a cultural thing, right? The other side of it is that I think that what a lot of retail traders do in the beginning is they say, I hate my day job and I want to make a living doing something else. And I think that day trading could be the place for me to do it. Okay. Probably not the best approach because day trading is a really great wealth enhancer, but it is not a very good wealth builder. Like where if you don't have a whole lot of capital to start with and you're trading, it's really hard to build up. Okay. So it's a good wealth enhancer, but not a good wealth builder. But if you want to trade for a living, then the way that you're going to go is you're going to say, okay, I need to make this much a month in order to live. And so how much would that come out a day? And then what should my profit targets be? Right. And then I have to assume that some days I'll lose money. So I might actually need to make twice that. And, you know, that's kind of the thinking that you go down. And so then when you're doing that, you'll go over and you'll say, oh, well, if I trade MES, then for the amount of margin that I have, if I trade one contract, that gets me there a lot more quickly than anything else. And so that's why people usually tend to go to MES or NASDAQ, because NASDAQ is really, really volatile like that, right? And you can really, really make or lose a lot on the NASDAQ, right? But when you take that approach, what you don't think about is, well, yes, it has the greatest profit potential, but it also has the greatest loss potential. And what you should really be asking yourself when you pick an instrument is, where am I going to have the best edge? Right? Because you can like size things differently, get a bigger account. Let's just assume that you can get a bigger account. Okay. The real question should be, in what market do I have the best edge? Right? Well, so for what we're doing, where we're trying to predict large meta orders and front run those flows and utilize news and so forth, because the markets are very statistically efficient, but not very informationally efficient. And so because of that, the treasuries are a very attractive place to trade for retail traders, because you can find those edges. They're all over the place, right? But those informational efficiencies are abundant. We were able to predict pretty casually here, even though I haven't taken a trade. But if you go back and watch the whole video, you'll see from the very beginning, I was saying it's a short today, probably. I think that the flows that we saw on Thursday, Friday are probably going to continue through into the beginning of this week. And that's a pretty easy call to make. In this situation, where you take the risk and the timing of it and all is really hard, and that's why I didn't take a trade. But you can predict those flows in the treasuries, and you can build that edge. And if you don't know anything about markets, right, treasuries is a place where you can build that edge too, right? Whereas in the E-mini, it's like, well, the other side of it is that most traders are doing what I refer to as noise trading, which is they're trying to watch what everybody else is doing. They're looking for patterns, and they're trying to take, trades based on risk reward and stuff like that, right? Noise trading on the whole is unprofitable. Most people are unprofitable with noise trading, okay? But if it's theoretically possible to be successful with noise trading, if there was a place where you would be successful with noise trading, it's probably the equity indexes, right? So that would be a reason to trade to do it, right? But like that's the whole thing is that the things that cause people to trade one instrument over the other, probably they're not doing it for the right reasons, right? Because the right reason would be that's the place where I have the best edge. That's the place where, you know, the risk makes sense for me. Whereas most people are going from, you know, their cultural context, what is the most attractive and coolest and the most interesting, and it moves all the time and you can make or lose large amounts, and so they trade it over there and then they get destroyed, right? Problem with patterns is the market is a living organism that changes and adapts all the time. Yes. And it changes and adapts very quickly. Well, in some instances it can. That kind of gets you into the fat-tailed thing, right? I think the fat tails is a really important concept to understand, because fat tails explains why so many people get fooled. Because you would think, okay, like 80 to 95% of traders fail. So one question that you might ask is, well, why do most traders fail? Right? Okay. But I think the when you look at that statistic, the question that comes to my mind, I think the question that people should be asking themselves is, if the failure rate is so high, why does anybody even bother trying? Because I can't think of anything else in life where the failure rate is so high and the outcomes are so dismal, and yet so many people want to try it, except for maybe trying to get into Hollywood. Like, that's the only thing I can think of that is like even remotely comparable. And on that side, it's like you're doing acting, and a lot of people just really enjoy acting, right? But like real trading, professional trading sucks. You know? Why would you do it? Well, I'll tell you why. It's because the market fools you. You come in and you start trading it. There is never a time where you don't feel like you have a chance. You know, you always feel like you have a chance with the market, and the market plays you like that. And the market will let you win and have like really good streaks of winning. And then you just always remember that when you were doing really well, and you're just always chasing after, if I can just get back into that spot when I was doing really, really well, right? Well, what you don't realize is that that's the market playing with the fat tails. Is it will have something where it happens most of the time, and so you'll make money most of the time, but then when you don't make money, you get absolutely creamed and you lose it all at once, right? And you will blame that on yourself when really that's the market behavior. It's the fat tails. That's why you get so many. Or, you know, the other side is like, most traders fail. We know that like 70 to 95%, depending on the study, say that day traders fail. But if you go on to Reddit and you ask people whether or not they're a profitable trader, half, if not the majority, will say that they're profitable traders. How is that the case? Well, it's because of fat tails. They will think that they're profitable traders until that one day a year that they blow the account. Right? That's how the market fools you. Yeah, and the actors, they don't get fooled like that. Yeah, you get constant rejection from the get-go. I was seeing this kind of thing. I don't know how true this is. I think it's something that it would be really difficult to prove. Okay, there's an iceberg at 28, by the way. But people are saying that Hollywood has become so entrenched in nepotism that the idea that you move to LA and become a famous actress is like not very realistic anymore. That like most of the acting jobs are being given to the children of famous actors or the children of producers and things like that, and that the nepotism is so high that you're just extremely likely to be picked up off the street like people used to 50 years ago or even 10, 20 years ago. I don't know how true that is, but I've seen that sentiment shared a lot. Ask why people play the lottery. I feel like that the lottery is a pretty small purchase, though. Yeah, I don't know. A lottery is kind of slightly different dynamics, maybe. where do you even find treasury yields on NinjaTrader? Do you have to purchase? So if you, so one thing is, you know, you need to be having the right data, because on the CME, you can pick to get like CME data and just get equity indexes, or you can get like the bundle, which is like $30 a month or something like that, right? And that's what I get. And then that will, so the first thing is, can you see ZN, right? So if you have ZN, then you have the data. So then the next question is, what is the instrument name? And the instrument name that you want is, I think 10YR. That's right, 10YR. So different platforms do it a little bit different. On here on Rhythmic, and thus on Jigsaw Trader, it's 10YY, or actually it's 5YY or 10Y. They make up for the difference in the numbers with an extra Y, right? But like the active contract on the micro yield is 10YQ23. But over in NinjaTrader, you're just going to want to type 10YR into your chart. Well, you know what? So we got that new low, kind of pulled back a little bit. There was a little bit of a you know, push where I was like, well, geez, it looks like I could have gone short. I'm okay with why I didn't do it, but I'm feeling good that we had the flows called correctly. Then they went and they had another slump. So when I see those sorts of things, slump, well, here, I'll show you. Is this a pattern? Well, I guess it's a pattern, but it's not one that gives you an entry. But you will see this quite often. Move down, flat, move down. Let me do it in blue so it's easier to see. Right. Flat, move down. How about that? That's a little bit better. Okay. See where it moved down, and then it was flat for a little bit, and then it slumped again. So that is what we tend to see when we're looking at a market that is like really desperate, because normally you would sit at that flat spot for a while because that's the liquidity hole, right? But what's happening is they ran into the liquidity hole, and then instead of backing off and waiting for the market to recover, there was another impulse of selling, right? So that tends to result in a market that is a little bit difficult to trade. Like now you're going to start getting stuff where it could come back up to here and then go all the way down. And yeah, this is where a little bit more volatility is going to come in, because the market makers become a lot more weary about taking on, putting liquidity. When a liquidity hole forms, a lot of the algorithms and market makers start to go, oh, okay, I can make a market here and here. But when that happens, then they get really scared. And by the way, what did the yield curve do on that move? It looks like they flattened. They flattened, and the dollar moved up another 20 cents. The dollar is really moving today. Hawaiian Electric shares are down 40% today. Dude, that whole fire thing is like wild to me. You know what? I really hate following natural disasters in the news cycle. I kind of avoid it, to be honest with you. Because I remember when I was on my mission, when I was an LDS missionary, that was when Hurricane Katrina happened. So I remember doing service projects after Hurricane Katrina, okay? And all I saw was, you know, everybody getting together and trying to help the people that, because it was really, really bad, right? When I come home, I find out that it was like a huge political scandal that really harmed George Bush's presidency and all of these sorts of things. I was like, huh, right? So now anytime that there's a natural disaster, It's always like, how come when it's a Republican president, everybody gets all upset and makes a big deal out of what the Republican president is doing, but when it's a Democrat president, the Democrat president doesn't have to visit the area or do anything, and the media doesn't get it, doesn't peep at all. You know that they're like currently holding up relief for them. So like there's a bill in Congress that will give money to help rebuild in Hawaii, but it's being attached to more Ukraine funds, right? So they're holding federal relief for Americans back as hostage so that they can get more money for the Ukraine war, right? And then nobody says anything. Nobody's like, oh, Joe Biden, how is it that there was a huge fire over here and you're on vacation? Nobody says anything. It pisses me off. So it's like, well, it doesn't really matter. So I tend not to follow those particular news stories too closely. 10% for the big guy. I tell you what, these treasuries look awfully heavy. I think that like 4.2 is pretty ugly here. After having a really good positive CPI print, and then the yields immediately go up to 4% is like that's a real slap in the face for the yield markets, right? So by the way, what time is it? Oh, it's 7:46. I missed the equity start. Well, they haven't really done much of anything, have they? They're just going sideways. But since we started, the treasuries have taken a real plunge. This push lower has happened almost exclusively after the equity started. Does seem to be driven by the dollar, though. Which reveals how maybe I could have potentially have talked myself into this trade, right? Is that, yes, the treasury market is kind of doing its little funky thing where that can make it really hard to trade, but it doesn't appear to me to be the volume in the treasuries that are really strongly driving it. It is, in fact, the currencies that are driving it. That kind of changes things, doesn't it? Well, geez, that was another strong push on lows. And a strong offer, too. I suppose I could try getting involved in it here, but I don't think that I would be able to reach for very much. I don't know how much further this can actually go. How much do these guys have to sell? I'm also concerned that if these guys, that after this bout of selling, like maybe this goes on for a few more days and then the treasury market might recover really strong. Because the problem is that I keep seeing this selling. It doesn't seem to be driven by any fundamental catalyst, right? So if that's the case, then when these guys are done, and it might take them multiple days, but when they're done, then you would think that the flows would shift towards the long side, right? And they are pushing through big orders too, by the way. Yeah, cumulative delta is plunging super quickly here. So it's only about a 10,000 difference in cumulative delta from when we started. But from the beginning of this session, it's more like 20, 30? 20 so far. I am seeing headlines on Twitter about the yields rising to 4.209. I find it really curious which 10-year yield they choose to use. That one right there was from Papyrus IQ, and he was using the micro treasury yield futures, or the index that they're based on. And pretty aggressive pullback here. Do you think that they'll get back to the 27.5? Or to say back to 4.2? Is the dollar shifting? Yes, the dollar is shifting back down. Good morning. How's the action this fine day? A surprisingly strong movement to the downside. So I came in saying it looks like I'm getting some early signs that there could be some activity today. But then as soon as I started trading, it did not look like a market that I wanted to touch. Wasn't really very active. But the sellers were still out there, and the sellers did push us significantly lower. Good for probably a $20 trade. Okay. News Squawk just posted a meme here showing the Bank of Japan. You know the meme. Which one do I choose? Nikkei sources or stealth intervention? Because the Japanese yen is getting crushed at the moment as the dollar moves. So this is a good reminder that the Bank of Japan could choose to step in here, right? And you could get a strong reversal off of that. But it does seem like that's the other thing, is that sometimes the Bank of Japan will come in and they'll put a headline out, or they'll say that they're doing something, but sometimes they just act in the market and try and keep it quiet, you know? And lately they've been doing more of the quiet intervention, where it's like, you know, it moves and then after it comes out, they say, oh yeah, the Bank of Japan was doing something there. Yeah, they are touching 27.5. So do you see what I mean? So you're going to get these liquidity holes here, right? They slipped through an area. They didn't stay there very long, and then they slipped lower on that like extra impulse move. But when you get that one where it goes down so quickly, it's really hard for them to maintain it. And it's very frequent that they will reverse back to where the initial liquidity hole was created. Now you've kind of got this space between here and 30. So they could get, you know, kind of like use the momentum to swing back up and get as high as 30. So you got that relatively wide range to trade, you know, and that's like 8 ticks, which is a lot in treasury terms. So that makes it really hard to pick a good spot in there with all of that, right? Like the real trade would have been to have been short somewhere like above 01 to begin with, and just saying, well, I know that it's slow, but I think that the meta order is going to be short. And then you could be taking it off down here when you get into the uncertainty and the wild volatility and stuff. I had the opportunity to do it. I knew it was there. I chose not to take it. Was that a bad call on my part? I feel like, you know, it being a Monday, that it's a reasonable decision to have made. Evergrande EV unit to issue fresh shares to bolster restructuring plans. Oh, here you go. Bank of England sells 790 million of bonds in auctions and receives 1.93 billion in bids. You know what? This catches us all the time, but sometimes you will get these really strong moves down going into Bank of England auctions and reverse repos and stuff like that. And it looks like that's what was happening. So that might have been the downside. So if the rest of the action today ends up being sideways, if not like reversing, and therefore it was that news headline that was pushing us down, then I'm definitely glad that I didn't take it, because that would have been like getting lucky, right? Because I had no inkling that there was an auction going on in the UK that could potentially affect us. Yeah, this is like the third time I can remember now where we would sell off into an auction like that from the Bank of England. So the action from here might be quite a bit more measured and difficult if it was really the Bank of England that was driving most of that. I don't see anything yet that gives me a really strong idea that the Japanese yen are coming in, but I think for funsies, I'm going to try building a position out here. On the possibility of this retracing. Yeah, the easy trade is definitely over. But with multiple contracts, I could trade this range and probably make out okay if I'm correct here. So it doesn't make sense to do this trade on my live account because I still want to trade one contract, and I'd really need to get a good spot, you know. Had a bid sitting there for a little while, and it's a pretty good spot in the line, but didn't get filled. Picked up without me. Now that it's been a little bit since the equities open, let's come over and see if we get any new good stories from Zero Hedge. Key events this week might be worth reading. Oh, yes. Left-wing media doesn't like rich men north of Richmond. The song. Yeah, that one is been a story. That's, you know what, like, to be honest, maybe it's just, like, not my kind of music, but I didn't think that the song was that good. Like, I had to force myself to sit and listen to it. But after listening to it with the lyrics, I definitely understand why it's causing a stir. Okay, key events this week: retail sales and FOMC minutes. With the midsummer sun rising, things turn much quieter across markets, although there are still enough events to keep traders on their toes and within Wi-Fi coverage at their favorite vacation spot. As Deutsche Bank's Peter Sidorov writes, in terms of events this week, we get several sound bites on the strength of the U.S. economic cycle, especially on the consumer front, with retail sales Tuesday, industrial production Wednesday, and a number of key retailers reporting results. In addition, the Fed will release the minutes of the July FOMC meeting on Wednesday. In Europe, key data will be in the UK with the July labor market on Tuesday, inflation Wednesday, and retail sales on Friday. Okay, so inflation on Wednesday is an important one, right? Given that we just had that kind of strong move there, which we think was because of a UK auction, we're definitely going to need to keep an eye on what happens pre-market Wednesday. Will also be a busy week in Asia with the July activity data and the 1-week MLF rate decision in China, and with preliminary Q2 GDP and national CPI in Japan. I won't go through all of the estimates that they have listed there. Consumer activity will also be in focus at the tail end of the earnings season, with reports this week from Home Depot Tuesday, Target on Wednesday, and Walmart on Thursday. Other notable corporate earnings include Cisco and Applied Materials in the US and Tencent and JD.com in China. From a central bank perspective, the minutes of the July FOMC meeting will give hints about the Fed's reaction function ahead of the September meeting, where the Fed is expected to keep rates on hold. With the data-dependent tone from the Fed speakers, any discussion on the expected path of inflation will be particularly interesting. Over in Europe, the UK inflation print for July will be the highlight. A strong downside surprise last month drove the second strongest daily rally in 2-year gilts since March. DB UK economist Sanja Raja sees headline inflation at 6.8 in line with consensus. Okay. It's interesting. Zero Hedge usually doesn't post an article like that, but, you know, it did kind of give me a, you know, some information that this week is actually a lot more busy than it appeared to me at first, right? Even though we are at the time of year where things tend to be really quiet, summer weeks. Okay, well, that's a pretty strong excursion against me. I did kind of think that they might pressure the lows again, though, so that was okay. Okay, another one. This is from Mike Shedlock via Mishtalk. Never heard of him. U.S. Treasury yields rose last week despite a relatively tame CPI report. Mortgage rates rose as well. What's going on? Question mark. Technically speaking, the chart is ominous. Rising triangle formations tend to break higher. That's certainly not a guarantee or even close, but it fits with U.S. Treasury action in response to CPI data. Nobody gives a shit about the technicals. Yes, they do. Of course, everybody does, but I don't care about that. Since 1998, there have been 3 major inversions where short-term yields soared above long-term yields across the board. Currently, we are in one of the steepest inversions in history, with the 3-month yield at 5.54 and the 10-year at 4.16. But it's the recent action that's more telling, especially versus the CPI. Year-over-year CPI peaked at 9.1% in June of 2022, and since then has plunged to 3.2%. For the move, the 10-year Treasury yield slid to 3.54. In April of 2023, mortgage rates also declined. What's the message? Another uptick in inflation is on the way. The Fed is not done hiking. The Goldilocks view by the Fed, any widely touted in the mainstream media, isn't going to happen. Okay, so I have some serious issues with this analysis. Not that what he's saying is necessarily wrong, but that he's making a conclusion based purely off of the chart. That because the rates rose there, that another uptick in inflation is on the way. That's not necessarily why the markets are selling. The treasury markets could be selling because of currency movements, right? In fact, what I'm seeing suggests that the action is coming largely from the currencies. So that doesn't necessarily mean that market thinks more inflation is on the way. I think it was the PPI that spooked the bond market. The index for crude petroleum rose 8.4% in July. That will spill over into gasoline prices unless the price of shelter stabilizes. The August CPI report is going to come in on the hot side. It is debatable if rate hikes will do much for shelter, at least the way the BLS and Fed view things, because home prices are not directly in the CPI. Higher rates will slow the pace of new construction, and it's finished construction that will add to supply and possibly pressure rent prices. Okay, so that's not true. It's just that what you see in the CPI from home prices is like a derivative based on rents, owner equivalent rents, and is slow. Delayed from the real-time data by almost a year. So the price of a new lease are falling because of the added supply, but existing leases are stubborn. Meanwhile, landlords have every reason and incentive to keep hiking rents and have done so despite reported claims to the contrary for months on end. Well, but that's not true either, because over the past year, the rents have come down, and in fact, this guy showed it in his own chart in here. I think. Maybe not. At least not the chart that I was thinking of the housing. The Fed created this housing mess by not factoring in home prices into its inflation model. Like homeowners who want to move but can't, the Fed is also trapped into a problem of its own making. The Fed wants to reduce demand and has done so, but simultaneously the Fed is reducing the supply of new houses. The later acts to firm rent prices. Okay, so I didn't get that second contract filled at 25, but so far this is going pretty good, isn't it? You think the twos are looking for 5%? Well, the micro 2 is still quite a ways away from that, though. That's far enough away from that I'm not so sure that you would get that today. It would have to be another one of those 15 to 20 basis point moves in order to get that today. Well, despite the issues I had with that article, it was still interesting. What's this? Kevin McCarthy retweets I don't know who this guy is. I can't, and it's not saying his whole name, but Biden's cheerleaders can't hold their disdain for his broken economic agenda any longer. That's bad. Over the past 5 days, CNN has issued a string of stinging rebukes of Bidenomics. Oh, really? So let's see what those were. CNN breaking news: U.S. inflation rose in July for the first time in a year as the cost of grocery, gas, and rent continues to weigh on Americans. Okay, so that's not necessarily a rebuke of Bidenomics. That's just reporting what came out in CPI. CNN: the typical American household spent $709 more in July than they did 2 years ago to buy the same goods and services, according to Moody's Analytics. That's awful. It will cost you 19.5% more to repair your car than it did a year ago, according to July's Consumer Price Index report released by the Bureau of Labor Statistics, blah, 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 blah. Americans' credit card debt levels have just notched an undesirable milestone. Okay, I hate this one. I hate this one. Can we go into this one? Okay, so credit card debt levels, for the first time ever, they've surpassed 1 trillion. Okay, so let's look at this. I think if we go to credit card levels, and then we can go Fred debt as percent of income. Okay. So this is something that you're going to see people talking about a lot that just drives me crazy, okay? Like this is like I'm going to debunk probably the biggest piece of misinformation in the market today, okay? This is what I consider to be the biggest piece of misinformation in the market today, okay? Consumer loans, credit cards, and other revolving plans, all commercial bets. And when you look at this price series, and I guess we can bring it into like since COVID, but people have taken on a lot of debt since the pandemic, and we have now reached $1 trillion. So consumer debt is at all-time highs. And so everybody says, well, this is bad. That's the sort of thing that happens ahead of a recession, because people get too much debt and then they have to pull back on spending and you get a recession, etc., right? Okay. Here's the thing though. This is not the metric that you want to look at. How much debt is out there overall? Well, that's always going to go up because there's more people and people make more money. So it's always going to be going up. So what we really need to look at is how much that debt is as a percent of disposable income. When we look at it as a percent of disposable income, oh, what do you know? Yes, it has been rising as a percent of disposable income, but only to levels that it was before 2020. And in fact, debt as a percent of income is actually at historic lows, right? For most of my life, debt as a percent of income has been over 10%. And it is now under 10%. So are consumers overburdened by debt? No, it is not at all. Biggest piece of misinformation I see out there in the market. I've seen a lot of people saying, there's a recession coming because of consumer household debt. Well, no, you're looking at the wrong statistic. Since the MES tick size is 1.25, doesn't it make sense to trade MES and set the stop loss, for example, at 10 ticks, and that way you can, well, I don't think so. So if you trade 10 ticks, that would be $15, right? The problem is that the MES 10 ticks is like just a little sneeze in ES, right? So 10 ticks is actually what 2.5 points essentially, right? You trade 2.5 points basically. Well, let me show you how I would approach this. So I'm going to open up a new chart here. You're saying, oh, well, if you trade, well, okay. So first of all, don't focus on the charts. Okay. The chart patterns aren't really very useful because the market is very statistically efficient. Okay, so come over here. Something that we can use that we know that there are some stylized behaviors in and could potentially help us is volatility. So I have this indicator here that's in my speculator Seth indicator package that is called multi-ATR. And I'm going to change this to be ticks. So it will tell me the average true range and number of ticks of a chart. And then I'm going to come in here and I'm going to change my data series to show a couple more days. Okay. Like let's look at the last, let's just say 10 days. Okay. So I just want that over there. Okay. So when we come over here and we look at the ATR right now. So you're saying that you want to be in a trade for about 5 minutes, because you're saying a 5-minute chart. You're looking at a 5-minute chart and you want your risk reward to be 10 ticks. But in an average 5-minute period, the market is moving 17 ticks. And that's not even like, that's factoring in all of the overnight action, right? So when you just factor in like the active market hours, you're talking more about like 20, 25 ticks. Okay. So in the period that you're talking about, the market moves almost twice as much as your average trade, right? So that means you could come in here and you could take a trade and lose 10 ticks and then get back in it again and lose another 10 ticks all within the same 5-minute period. See what I'm saying? Like the volatility, just the average volatility is higher than the trade that you're trying to get, right? So if you did make 10 ticks, guess what? Like it's all within the margin of noise, right? Like 10 ticks in the E-mini is not enough to have said something's happened. You've actually made a prediction that is predicting that there's a large meta order buying or something like that. It's all just, you're just trading the noise, right? So the end result of that is that even though you say that you're only taking like 10 ticks, one, you're going to catch losses that are larger than that because of slippage. And two, you're going to have days where you take multiple trades and you could end up losing, like a couple $100 all in one day just because of on a strong volatile day in treasuries. It also means there's going to be some days where, like, when the market is moving, you're just not going to be able to trade because it's going to be moving too quickly. You would almost certainly have your stop get hit almost instantly in certain time periods, right? Okay. So what is the 10-year ATR? Let's go back here. NYR, micro 10-year yield futures. Now this might not show up. My instrument might be screwed up. Oh, okay, cool. We're good. Go back to data series. Make sure that I have more than just a few days. Okay. And then we go and we add our indicator on. Speculator Seth, multi-ATR, range type in the terms of ticks. Okay. Well, the ATR of a 5-minute bar in the micro treasury yield future is only 6.81. In other words, in a 5-minute period, you might make $6, right? And I am typically looking for at least 10 ticks, right? So my target is wider than the average range. Now, I also kind of will often trade a little bit higher of a time frame. So I'm actually more like 30, right? And then when you get into that, then, I'm about right on with what the ATR is. And yeah, sometimes there are moves that just go like way more than that. And that's where I will catch like those $50 trades, right? So that's how I would approach it. Then to go back, the issue is, again, like, where are you going to get, what is the appropriate risk for you? And okay, so let me back up. So when you're deciding an instrument, I think that the two most important things are, one, is it sized appropriate for your risk tolerance? And two, can you actually develop an edge in it? Okay. Now on the number one, is it sized appropriately for your risk tolerance? You can always change how many contracts you're trading, right? But there is like the minimum amount, like if you hold one contract, how much are you going to lose on one contract? And then what is the volatility of the instruments? And I'm telling you that with the ES, the ES is so volatile that if you're trying to hold yourself to like a $10 loss, it's just not practical in MES, right? In MES, like an average day, you could lose $50, right? Whereas in the treasuries, it's much better. And then on the split side, where are you actually going to develop your edge? Well, in the 10-year treasuries, they're very sensitive to economic news. There's all this information about how the Federal Reserve does things. There's all sorts of things that we can look at as pieces of information. Because it is such a large and liquid instrument, there are a lot of really regular flows that come through and are consistent from all of these funds that have to do stuff in the treasuries. Versus the equity indexes, because it's an index of 500 stocks, there's just a lot of randomness in the behavior that you got to worry about, right? I tell you what, I kind of feel like I should have taken live trade today. If I had taken a trade here, it would have been $10, which, okay, cool. That's just an average trade, right? I felt like we were in the volatile area, and so I didn't want to touch it. But look, it's played out almost to a T exactly what I thought it would. So the determination that I had made was that the meta order selling that we were seeing was actually because of the Bank of England auction. And now that that was over, you would probably see that flow subside and see a pullback. And you did. You see how I did that? See, it had nothing to do with the chart, did it? I mean, I can look at the chart. I can see I can see how it played out. I can describe to you it was down here and then it moved up to here, and I can tell you a couple of things about stylized behaviors and stuff that gave us certain points to see what was going on. But ultimately, the reason that I took the trade was because I had determined that the selling flows that we were seeing was because of an auction, and now that the auction was over, the flow was likely to change. So it had nothing to do with the technicals whatsoever. I wouldn't call it something fundamental, right? That wasn't fundamentals. That wasn't like new economic data that we got, right? But it wasn't a chart pattern, right? Good example. Wish I had actually traded it, because then I could toot my horn a little bit more, right? Hold it up and be like, guys, this is why you should trade this way. With Ninja Trader brokerage, do you need to pay? No. Well, so I would recommend getting the CME bundle. I get the CME bundle because I want to see not just what's going on in the treasuries, but I want to see all of the markets, right? So I get the CME bundle, which is like $30 a month. And then, like I said, as of late, I've been making enough that I pay for the data fees, basically. Maybe when the summer is over, I might size up a little bit. But for now, I'm okay with just breaking even after fees. Well, I didn't get filled at 30, though. It would be mighty unfortunate if it came all the way back to my entry. Still got a pretty good excursion off of it, though. How do you even start trading like that? I'm talking about the trade you wish you had made. Well, so the way that I think you do it is you go out to your financial news sites like Zero Hedge and CNBC and read as much as you can about the market and pay particular attention for anything that would help predict future orders and analyst reports from flow analysts at banks like JP Morgan, Goldman Sachs, etc. And you're consuming all of that financial information, getting some idea of like what the sentiment over in the market is. And then you come in here and you sit with us and you trade with us every day. You watch the order flow and you listen to what your news squawk is saying. You listen to what people are saying on Twitter. And then you watch how the flows react to those various pieces of new information. And with time, you will kind of sort out in your mind, you know, how the market tends to react to certain things. How people are positioned and in which situations they might be more surprised than others, and you know that's something that you have to build, because we're talking about systems that are more complicated than any one person sitting there at one point in time can really put together, right? But you, over a long period of time and using your memory, you can. Right. And so as you start watching this, your brain is going to form new connections and you're just going to start seeing it. And at a certain point, it will just become second nature to you. You know, like this one, that we had an auction and that's over with. And so now the flow should shift and it could result in a little bit of a pullback. You know, I don't even have to think about it, really. It's just like, no duh. I mean, I suppose I can explain it logically, but only because I have so much experience from here on the stream trying to explain these things to people. Most people might not even be able to explain to you how they know that it's going to reverse off of that, right? But you see it happen so many times. Your brain has built this neural network to deal with those sorts of problems, and it just spits out the answer in the same way that like a large language model does. You know, it's just like how you know when I ask you a question, how do you find the words? You don't even consciously think about it. You just do it. or when you're in a social situation and you're trying to sort out how different people are feeling. So I had this situation where, so at my church, in my church, all of the positions are voluntary. And so the leader of the congregation, it was time for them to switch. And so somebody was talking about it, and the way that they were talking about it, I was like, oh, they must know. That must mean that their husband is like in the new leadership for the church. And I can't necessarily explain how I know that. It's just I can just, all of the information that I've taken in, what she said, the way that they're acting, all of these things tells me that they knew something, right? And my brain is just a neural network. It's taking in all of those real, and that's what a neural network is really good at, right? Neural network is really good at taking a large number of inputs and coming to a conclusion based on those large numbers of inputs. That's why they're so good at things like a large language model, for instance. So it takes practice, takes time, right? But if you watch the market and you're consuming all of that information, you will figure it out. And you'll have a much easier time figuring that out than you will like trying to trade technical analysis, right? Because like the whole thing is like with the technical analysis, right? Okay, you think you see something. And you think, oh, okay, let's see here. I have a certain chart pattern and it has a really good win rate at around 65%. Okay, so the perfect example. So you've been watching it, and since you've been watching it, you think that it has a win rate of around 66%. So you think if I take equal risk reward and I trade on it, I should win 66% of the time, right? Okay, so number one, if you actually trade for like 6 months with that, and you have equal risk reward, okay, your average winner is as large as your average loser, okay, and you get around 65%, you're a god, and we should start a hedge fund, okay? I would be really, really impressed if you were trading equal risk reward and got 65%, okay? The problem is that we as humans our minds are not capable of seeing enough data at any one given time to be able to see something like that, right? So we can think about like anything more than about 200. There's actually like, it's called Dunbar's number, right? So it's somewhere around 200, and anything more than 200, we have a hard time comprehending it, right? Well, the issue is that markets have fat tails, right? So it might seem like you win around 65% of the time, but then what you're going to have happen is there's going to be this one day or week or month or whatever where it loses every single time, and you have this crazy drawdown, right? And in order to see that, you need to have tens of thousands of data points, right? Way, way, way further than you have the ability to look at, right? So if you could go and you could backtest a strategy, you learned NinjaTrader and you learned how to backtest this. That's kind of my background, as I'm a programmer, so I backtested a lot of these things. And what I've always found is that if I include enough data to get to like industry standards, right? So like if I want to start a commodities trading pool, you have to show people the last 5 years of performance if they ask for it. Last 5 years, or the if you haven't been around for 5 years, the total performance of the fund, right? 5 years is the industry standard. You're not going to go and put a fund into your IRA or your 401k if you can't see how they've performed the last 5 years, right? Once you start backtesting to 5 years, you'll find out that most of these things, they're actually random, and they might not seem random when you're looking at only a few months of data, because that's just not enough data, because markets have fat tails, right? So it's not that you're a delusional person, but you are delusional to think that the pattern is actually 65%. But you're doing something that almost every person will do, because that's the way that our brains are wired. We're really good at seeing like a normal distribution. We're really good at, I've encountered this thing 200 times in my life, and most of the time, 60% of the time, it comes out this way, right? We're really good at seeing that sort of a thing, but we're not very good at all at seeing the sort of a thing where over 10,000 data samples there's like 5 data samples that are, the combination of those are larger than the profit that could be made on everything else, right? That's a fat tail. And here's kind of the advantage, right? Because when you're trading technical analysis, what can you do? You can come in and you can find a pattern and then just try and hold yourself to that pattern, right? So you might trade 2 years before you realize the flaw with that pattern. You run into the market where it doesn't work. And then after 2 years, you give up on your pattern. I mean, that's what most people do, right? They trade it and then after a year or two, they shift to something else. And how many times are you able to do that, right? And if it takes you 2 years to test one single pattern, how many times can you actually do that in your life, right? There's only so many that you can go to, right? And how do you actually get better at it? Because all you can do is see the pattern and stick to the pattern. And maybe there's a situation where you don't see the pattern very well and you can get better at seeing it. But like, if it's like really strict and everything, where's your room for you to get better at it, right? Whereas now come back and look at our approach where we're talking about using informational inefficiencies in the market, right? Well, if I think that something is going on and I'm wrong, I should be able to figure out almost immediately why I was wrong, right? Like I thought that there was going to be like in this situation, I thought that there was some pretty strong selling on Thursday and Friday. There's a large meta order out there selling. I suspect that meta order could be coming in today and selling as well. But in reality, it wasn't, right? In reality, the reason why we moved it down was because of the auction that I didn't know about. So what do I have that right away? I have something, even though I was kind of right in the direction overall, I was wrong on why. And so now I have something to work on, right? Which is to keep track of the auctions from other countries better. And be aware of when there are auctions that are going to be going on during our trading session from the UK, right? Immediately I have something I can work on, right? In every situation, I can go through there and I can look at the flows and I can say, okay, what was I predicting on the flows and what actually happened, right? And why? What was a piece of information that I was missing? What could I have done to have caught this better, right? There's always something that you can improve on. And so there's constant work. And, I didn't know, so there was a piece of information that I didn't know about. Okay, well, I need to study harder. I need to read more. I need to be, there's always something I can do. And so you're always in a constant cycle of work. When they say, as a trader, you got to put in the work. Well, what does that even mean when you're technical analysis trading? Look at the charts harder? Look at more charts? It doesn't make sense. This is why traders go nowhere, because they want to work, but they don't actually have any work to do. But when you start actually looking at more of an informational perspective on the market, and you realize that like I could study every day for the rest, like all day, every day for the rest of my life and still only know even a fraction of a percentage of the overall information there is out there to know about the market. Now you can work, right? You have more work than you will have time to do to work, right? Oh, check the M's. I have to. I really hate when Discord moved things over to people have to send a message request because I just don't see those as quickly. I just don't see those as quickly. When you say market, are you talking about a narrow area of knowledge like the treasuries? Well, okay, so that's I understand where that kind of question is coming from. That's a fair point. So yeah, I could spend all day, every day, studying about the treasuries and only know a fraction of the stuff that there is to know about the treasuries. But you're going to have to know a little bit about everything, right? Because it's all interconnected, right? Like the Japanese yen is really heavily correlated with the treasuries. There's like a really strong relationship there. So I have to keep track of what's going on in Japan with the Bank of Japan, and I could probably spend my whole life studying about the history of the Bank of Japan. One of the things that I want to get into, so right now I'm doing series 3. When I get done with series 3, I think the next thing that I want to do is I found this history book about the Federal Reserve. And I mean, it's like a 3-part textbook. I mean, that's a lot. Just on the history of the Federal Reserve. How much edge will that actually bring? Who knows? But I would have to think that knowing what the Federal Reserve has done in the past and how things are kind of go under behind the scenes, I think would probably be useful information. And as always ends up being like little tiny things that a lot of people might miss. That's another thing about the market is, the market really tends to reward nuance. That little piece of information that everybody else misses. Was watching your interview with Gary Norton and his Norton Method. What are your thoughts now about that now compared to what you're mentioning now about researching the markets? Well, so when I talked to Gary, I was already kind of into this style of trading, and it was kind of in the beginnings of like finding a good way to relate it to other people. Now, there's this other side of what we teach that is really important, is the market microstructure stuff, right? So there are behaviors that you will see the market exhibit very consistently. They're not the ones that everybody talks about as traders. I don't know why traders ignore these things, but there are behaviors. And in this trade, I was using one of those stylized behaviors to some extent. Basically, I had identified some areas that had become liquidity holes. And so I knew that there was a good chance of them kind of getting slung back around and up because of that. Like it kind of creates a situation where it's easier to have a reversal. But so when you're talking about Gary Norton, he's kind of taking advantage of that stuff. His style is really more about taking advantage of the behaviors between correlated assets. I can come in here and I can watch the treasuries, and I have the 5, the 10, and the 30, and the Japanese yen, and then I can see everything moved up. The Japanese yen, it moved up, and all of the treasuries moved up, but the 10-year didn't move up as much as the other ones. So immediately I know something's going on. Is there a reason for me to think that part of the spread should be shifting? Or maybe it's just lagging and I should be buying it there, right? And then you can buy. And those are the kind of the sorts of, Gary has a really smart system that, is it worth what he's charging for it? Well, I think in the amount of time it probably is. It's not that you couldn't figure it out yourself, but he definitely has some insights in there that, and again, it's often the details. So a beginner might read that and not realize where he's being he's telling you things that are actually really important. You might not even think twice about them if that's the first exposure you've had. So in other words, Gary is trying to trade a market maker style, which market maker style is largely about trading assets against each other, essentially, and figuring out what fair value is based on correlated assets, right? Now, you can trade that way, and I think it's a very valuable thing that Gary is putting that information out there and teaching people that, because it's kind of like turning into a dying art because the robots have taken over. So just be aware that what Gary is doing is probably the hardest way of doing things. And there's not a lot of opportunity in it. You kind of have to really search for a market where you can really catch those opportunities. And just keep that in mind with what he's talking about. There's going to be a lot more opportunity out there in informational inefficiency, right? The informational that you're going to get to a spot that you're happy with a lot faster, trying to take the the informational inefficiency route than you are the market making route. Right? That last comment makes it hard to swallow. Well, it is. I mean, it's an unfortunate thing, but like that's just the way that the market has been, right? I mean, and then that's the way that you always have to approach it. So like what we know about the market microstructure kind of leads to these mesoscale kind of behaviors. And the important one for us is that it's very easy for markets to arbitrage away statistical inefficiencies, but it is also very, very difficult for markets to get to like what would be considered fair value. So markets are almost never efficient in terms of like, is current price factor in all information? It almost never does. But the market is very, very good at eliminating all of the patterns, right? Or you know, taking out these kinds of correlations that you'd be looking at for market making, right? That's why we focus more on the informational inefficiency. It's because of what we know about the market microstructure. That doesn't mean that there aren't opportunities in the statistical inefficiencies, right? You might find one. You might, you probably need to be a physics PhD to have the level of math to find the kind of inefficiencies that maybe exist out there now. Okay, but it does happen. And when you find one of them, those, then they're amazing because they're much more consistent, right? Any additional info I can read up on informational efficiencies content should talk about? Okay, so I have a video. Called about the inefficient market hypothesis, where we really, really dive into this sort of stuff. And the key thing is towards the end of that video, the authors of that paper listed a number of things that they think would be areas of research for things that can predict future orders that would be in the area of informational inefficiencies that we can take advantage of, right? One of the ones that they mentioned is options gamma, hedging from these large institutions based or market makers based on options gamma is one of the ones that they mentioned, for instance. Want to count on average how many times per stream the word ADHD comes? I haven't mentioned ADHD today yet, have I? It does come up a lot, though. A lot of traders have ADHD, and if you have ADHD, understanding it is a really significant factor towards becoming successful. No, I didn't say anything about ADHD. I have wondered, I don't know, man. I kind of feel like I don't really want to make ADHD content because I don't want the regular people in my life to be thinking that, oh, he's ADHD, On the stream, I guess I'm okay talking about it, but like I don't want to talk about it at work, for instance. People treat you differently. They totally do. I mean, people treat you differently if you have ADHD anyways, but it certainly doesn't help to tell them. Unless you're talking about somebody that you're really interacting with a lot and you have a trusting relationship with, and you can kind of sort those things out, right? So that's one of the reasons why I'm a little bit hesitant to make more content about ADHD, because I kind of feel like from looking at ADHD content creators out there, most of the content that you get is like, oh, I didn't know that I had ADHD, but I always struggled, and then I was diagnosed as an adult, and here's everything that I've learned since I've been diagnosed as an adult. That's what most people give you, right? I think that my path is a lot more useful to people, which was I was diagnosed when I was in 3rd grade, and I've known most of my life that I have it, and I've dealt with it my whole life and with medication, and that has allowed me to be very successful. And I have had the kind of success in life that most ADHD people wish they had, which kind of sucks to watch because part of you will be sad about what you've lost. That's really hard. To know that you could have achieved so much more in life if you'd known earlier. And me, I feel like that's what that looks like, right? But on the other hand, it's also, okay, so what does this person do that I don't do, right? What was it that being on it medication the whole time kind of changed? Well, I was able to build lots of systems. I was able to build routines and patterns of behavior that allow me to cope with my ADHD, essentially. Which I don't think is shared enough. There's a lot of talk about medication and stuff, but they don't talk about like the behavioral side of it, how to deal with it behaviorally. How do you know if you're... I think they would probably say something. Plus, I guess I don't feel like I talk about it that much. But you're going to see it come up because ADHD people are very strongly attracted to trading. Like if you go on a trading floor at like a Goldman Sachs, like half of the people on the desk are on Adderall. I'm not even kidding. Well, where do you think we should do with this second contract? I'm thinking about, given the time that we have left, let's see if we can get it filled at evens, and then if it doesn't, we'll just take it off when we end the session. Well, you would have to have gotten, or you would need to have been diagnosed with the condition to have gotten prescribed that, right? There are a few other conditions that you could get prescribed Adderall for, but it's, like sleep disorders or something like that, but very, very, very rare. I'm sure that there is a lot of, you don't really have it, but get diagnosed with it so that you can have the medication, because the medication would help your performance, but if you're a normal person, there's not a whole lot of room, because ADHD will make you feel tense. It'll kind of, you notice, I mean, I don't know how much this comes off in the stream. I feel like we have a pretty chill stream, but I also think the reality is I'm a very serious person, right? I'm much more serious than your average person. And that comes out, and that's because of the medication. The medication just has you in that mode all the time, right? And it doesn't take very much to push that into like anxiety, and then it would really hurt your trading. How do you trade something as dead as the 10-year treasuries? The volatility seems so low. Well, the liquidity is great, actually. Well, so the ZN has the best liquidity out of anything. Nothing has more, well, the 2-year, I guess, but this is like the 10-year is the star, man. Has the best liquidity. When you come over here, the liquidity is kind of crappy in the micros, right? You have to deal with that. But dealing with that, you learn a lot from dealing with the issues with liquidity over there, right? Oh, you don't have ZN? You might not have you might only have equity index data then. ZN is one. If I was going to trade micro 10-year, I would still want to have the ZN up so I can see the order flow in the ZN, right? Because that's how we see what's actually going on, right? I might think, okay, here's what I think the balance of flows are going to be, but I still have to come over here and look at the instruments and look at the orders and see if that's actually happening, right? And do I actually see confirming evidence of that in the actual flows to confirm my hypothesis? But it is slow. Now, I tell you what, there are times when that's a really big advantage, okay? When there's a non-farms or a CPI report that the market is reacting really, really strongly to, you come over into the E-mini and it's just going to be going back and forth so quickly that there's just no way that you could take a trade and not think that you're going to get stopped out half the time, right? Whereas over here in the treasuries, it's moving, but it's slowly enough that you can actually keep up with it. Having those, especially when we're having like a market decline, the equity market can get so crazy volatile and it can be so hard to trade. But then you come over into the treasuries and the treasuries will just trend the whole time. And they're like easy trades. So having the treasury in your back pocket that's the best tool to have in your back pocket when we go into a bear market. So, and yeah, that means you have to be patient for sure. But I tell you what, that's one of the most important things for traders to learn is to be patient. You know, a lot of traders, I think, fail simply because they aren't patient enough. They want to get to the next trade. And so they go to these short-term strategies that fulfill their ADHD, right? There's the word again. And, you know, they never get into finding an actual edge because what they're doing is they're trading to satisfy their need for action rather than based on something that's actually an edge. You know, the market is basically a mechanism to transfer wealth from the informed and the patient, from the uninformed and impatient to the informed and patient, right? So you want to have both. You want to be both informed and patient, right? And yeah, that means you might take one trade a session or no trades at all, like I did today. No live trades today. And one sim trade that did well, right? It is patient, but it's more appropriate for most retail traders, I think. Must be some sort of a pollen in the air. I feel like my allergies have been acting up a bit this week. I guess I will bring in the air filter in here. Run it again. Yeah, ZN tick value is $15, which is a lot. Yes, it is. So, C-Power, we primarily trade treasury futures here. I mean, I keep track of all of the markets. This channel should be useful to you regardless of which futures you're trading. But my trades are primarily in the treasuries. So now you're getting into something very interesting, Zero Strats. Okay, so over here in the main treasury futures, you know, a lot of the activity that you see going on here is actually spread trading. They're trading on the yield curve flattening or steepening, right? And because of that, well, the 30-year, if interest rates move, like if the Federal Reserve raises interest rates 25 basis points, like nobody's expecting it and they raise 25 basis points, and how would all of the treasuries react to that? Well, if you change the interest rate to be 25 basis points for 5 years, that's very different from 25 basis points over every year for 30 years, right? So a change in interest rates has a much stronger impact on the 30-year, on the price of the 30-year. And that's why the 30-year is priced in 30 seconds, whereas the 10-year is half of that. Is in 64ths, and vice versa for the 5-year. It's 1/28, right? So if I want to take a spread trade where I'm saying that the interest rate on this one will change this much and the interest rate on this one will change this much, I have to use a different ratio. So like I might trade, I don't know what the ratio is right now. I think it's just 2-to-1. I would trade 2 ZN contracts and 1 ZB contract, and that would get me to the correct ratio, right? Well, enter in the micro treasury yield futures, which are a smaller instrument designed more for retail traders. And the cool thing about the micro treasury yield futures is that because it's all priced in yield, you don't have to do any of that math. So they are all just $1 per tick. They're all sized the same, and yet one side or the other may move more depending on the situation and whether the yield curve is steepening or flattening. Now, if you're just going to trade outrights, though, then yeah, you would want to do the 10-year because it has the most liquidity. I mean, look at the other ones over here. There's like a 10-tick spread over in the 30-year. The 5-year like doesn't even trade anymore, and the 2-year also pretty widespread. So most of the retail traders go over to the 10-year. That's just the way it is. I'm sure that over the years and someday that might get better, but for now. So what is the symbol? So it depends on your platform, but it's going to be something like 10YR or 10Y. And again, you might have to talk to your broker and get your data sorted out to make sure that you're getting the Chicago Board of Trade data, which is included in the CME bundle. But a lot of the default data that some brokers give you just gives you equity index futures. And so if you don't have ZN, you need to talk to your broker. I didn't hear my beep sound. Did my beep sound go off and I just didn't remember it? I took it off at evens. It looks like it went a little bit further than that, but they are coming back to us. So I think that was a pretty good exit still. Pretty good trade overall, though. Like, wow. What beep sound? My chart will play a sound at 10:55 Eastern time so that I know that it's time to end the stream. Could you show me what a 1 minute? Oh, Jesus. It looks like a total disaster is what it looks like. Do I have one? Oh, I thought I had a chart, but I guess I closed it. Yeah, because, there isn't a trade every minute in the 10-year. So you'll get these sorts of like this. So if I do a 5-minute chart, you do a 5-minute chart, like especially during the overnight action, you get all of these gaps and all sorts of weird, funky stuff, right? Starting from here, though, the chart should be pretty decent. But that's where I was saying, like, I would have everything set to ZN. I would have everything set to ZN and do all of my analysis on ZN. And then put my trades the opposite direction on the 10-year. What do you trade? Well, I don't think of it in terms of time frames and charts and things. I do have charts, but look at what I'm using my charts for. If I come over here, okay, like part of it is just so that I can remember what happened. But look at the indicator. This one right here is cumulative delta. So I can see that there was pretty consistent selling all along all of this decline, which is what we should see. But I want to trade when these things are correlated, because that's what would indicate a larger meta order, right? This right here is the spread, the difference between the 2-year and the 10-year treasury, right? And so those are the two primary reasons that I have the chart. So I'm not looking at it and saying, oh, there was a higher high and then a higher low, and so now I want to go long, or none of that. None of that. I avoid trying to trade based on some sort of a pattern as much as possible. No, the 10 ZN and the 10-year are flipped, right? So price with treasuries, the price and the yield are inversely correlated to each other, right? So if the treasuries are selling, then they will have to offer a higher interest rate to compensate for the lower cost of the treasury. So you should see treasuries sell, yields buy, or vice versa. They should be the mirror image of each other for the most part. So this is why it's so good to start with the treasuries, guys. Because I could tell you, you go and you trade the treasuries for a while, and then you go into almost anything else. All of the stuff that you learn in the treasuries is still going to be useful, right? Because the treasuries are kind of telling you what does the market think about the economy, where the way the interest rates are going, all of these sorts of things. You can use that information, and it's relevant in stocks. It's relevant in every other asset that you trade, right? And you'll understand what's going on when all of these other retail traders, they don't know anything about the treasuries, right? It's a huge, I'm telling you, it's a huge edge on the rest of the market. And then on top of that, treasuries are like really like one of the most efficient markets in the world because the liquidity is so high, right? So you don't get fooled into all of these kind of noise trades that you know, people in other markets will do and think that they're geniuses for, but then eventually fail, right? The treasury will tell you right away that you're wrong. You try to trade a pattern or something like that, right? And so the result is that trading other things will almost feel like child's play. Like when the GameStop thing happened, I made a little bit of there was a key piece of information that I missed, so I didn't get as much of a profit as I wanted when the trade was over, but I still made money off of the GameStop thing, right? And to me, it was just a game, because the way that they behaved over there was really quite kind of comical and seemed almost childish to me compared to the way that the treasuries usually move. I do have a video about trading the micro treasuries. Dude, I have a video for everything these days. I feel like there's 2 or 3 things that I feel like that we're deficient in, but I have a lot of really good videos on the channel. I'm really quite proud of the library that I have. But I have a video that's about the micro treasury yield futures. It goes into kind of the key starter basics for treasuries. Okay, well, anyways, it's time for me to get going, guys. So, what should we put on today's title? Let's say yields rise. During Bank of England auction. Now, if we did that every time we mentioned ADHD, then every video would be about ADHD, wouldn't it? Yep. Thank you guys. Lots of newer viewers today, so I really appreciate it. And yeah, so if you're new to the channel, definitely go and check out all of the videos that we have, and then also check out the stuff in the video description, because the stuff that I think will be the most useful to you is in the video description, like the affiliate link to the trading software that I use, the affiliate link to the news squawk that I use. Those are like the most valuable services that you can get, are the stuff in my description, right? And then check out the playlists on the channel. Should be the way that the channel is structured. You should see the videos that are going to be the most important to you on the channel page, so check them out. And then there's Discord too in the video description, so you can ask me more questions during the day from Discord. All right. Yep. Is it safe to look at ZN and trade the 10-year accordingly? Exactly. So order flow is really important to watch. I would watch the order flow in ZN, and then place your trades in the 10-year. Then we would know statistically how many times you mentioned it. I guess we would. Well, we could have a robot just look through all of the videos and just transcribe them and see how often it's mentioned. Okay, guys, I gotta get going. I will see you tomorrow. In the meantime, stay excellent.